What's going on, guys? How are you? How are you doing today? I want to show you this strategy, a very simple strategy on volatility 75 and how you can make money using this strategy. So this strategy is going to be implemented on the M5 time frame, as you can see from this screen. If you look down, you see that this is volatility 75 index, and the broker that offers this index is none other than Deriv. The links to trade this index are in the description down below. So after watching and realizing that you can do this, you have to join with the link in the description down below and start trading. You can trade with as low as $10, $5 on this particular pair. What you need to do is just start. So right, we are going to be using the trends on this pair. So this is what I've realized about this pair after years of studying it, right? After years of studying it, I've realized that it does the same thing over and over again. So what we have to understand is during the beginning of a day, the V75 either trends upwards or trends downwards. What you just need to understand is which side is it trending to during the beginning of the day. So during this day, what happened here is simple. You need to understand that you have to see either three lows or three highs for you to validate a trending market, right? So here, from what you are seeing, we have this first high, and we have this second high, and this third high. So this validates that this thing has been trending to the upside. So what do you wait for? You wait for a break of either of those highs that you are going to be identifying, right? So it means that this was trending downwards. It means that when it breaks that particular level, like what it did in this case, you wait for price to retest, or not to retest per se, but to close above this same level as a bullish candle or a bearish candle, depending on where you are going. So in this case, we closed with this bearish candle that you can see right here. So this green candle, which is more like an engulfing candle, as you can see, is the confirmation that you're waiting for. So after that is done, you enter your buy trade at this particular point, right? And I'll show you where to put your stop loss as we go on most of the examples, right? And what you are targeting is the next high in sight. So the next high in sight is this one that you can see, which is the beginning of this trend, right? And which one? And this one. So you choose which one you want to go for. And remember, this index or this method is not a method to swing, right? This is a method to get in and out around 45 minutes, 30 minutes or so. Because if you look, this is the M5, and here we stayed in how many candles? 1, 2 candles, which means in 10 minutes you could have made your money. So you maximize on the lot size and you don't do much on the on the holding part. So if you look at this, we have this low, right? And after that low, we have another low like this. So we have this low, this high, this low, that high, right? So after this, what do you see? You have another low here with this high that failed to take out. So we have 3 lows here. And what do? You stretch this out and wait for price to break. Price took this level out, as you can see on this particular move. And what did it do? It went back, right? What are you waiting for? You're waiting for price to turn and close as a bearish here, because remember, we want to sell. So as it closes as bearish, this is your sell position, and you're going to target the next low in sight. And the next low in sight is this one, and this one is closer to the entry, which is roughly 10 minutes, and you would have taken your money. You remember? So there was some years where I was doing what I called a 2 candle strategy, where I was just looking for 2 candles after I enter a trade and I get out, and I would have staked on those candles and made sure that if I'm going to go in, I'm going to be no different to someone who would have swinged and entered with modest lots. So that is the secret of this. Look at this. We have what? We have 3, right? Remember, trending first, it's trending upwards. What do we have? We have 1. This is the first low. This is the second low. And this, we can consider this or this as the third low, but I'm going to consider this one. Because why? Because these ranges that you can see are better, considering that I just want you to look at something. You see this one, what is happening on those retracements. There's one move that goes up, retracement, one move that goes up, retracement, and this is the move that was supposed to take out this high, but it didn't. So what are we waiting for? Remember, we are waiting for a break of that particular level. So when this level breaks, as you can see, what are you waiting for? You're waiting for price to get in and give you a bearish candle. And as you can see here, the bearish candle was this one, was this black that is here. And look at what price did. Price went up again and took out all this, right? Which means that you would have lost this trade. This is just to show you that this strategy is not 100% and it's not a bulletproof or a holy grail. You are going to lose some trades, but what we are saying is in a week you are going to be winning more trades than you ever imagined with this trade. So that's that. And if you look at more of these examples, you see that this thing repeats itself over and over again on the M5 time frame. So what I want to show you right now, what happened on this day where this was clear. Remember, you need very clear setups. You don't need to do something that you don't understand, right? We have 3, right? Then we have this break right here. You see the break that we are talking about on this particular pair. So when it breaks, it comes back and gives you all these, and look at what price did. So the move that breaks the low or the high is where you are going to be putting a stop loss, just to make sure that you are not going to be taken out prematurely. So this is what you do, and you wait for the next low, and this is how price will be going. And with that same reasoning insight, let's look at what happened here. Price was trending upwards. As you can see, this is a trend up. And what did price do? It took out this particular low. And after that, what were you waiting for? You were going to get your entry as soon as price prints this black candle right there. And you're going to target the next lows that were in sight. And you have that one, you have this one, and you have these lows, which all were taken out, right? So here, this is what is currently happening. Today's date is the 4th of Feb 2025, and this is what is currently happening. Price has taken out this low. As you can see from where you are, you can see that price has been trending upwards, but the first low that it took out was this one, massively like this. So what you do here, what I'm waiting for, or what you should wait for, is a move back to this yellow zone, and we see a confirmation candle which is bearish like this. When you see a bearish candle like that, what you are going to do is to enter a sell position right here, and the stop loss is going to go above that structure that price would have made. If you are conservative and you want to stay in the trade for longer, you're going to use this candle that took out the structure as your stop loss. But mine, I'm going to be using the structure that I see there, and I'm going to go for the next possible low that I'm going to be seeing in sight. So this is what I'm going to do, and I would love for you guys to join me if you are seeing this in time. And this is how you are going to be trading volatility 75 henceforth. Very easy, very practical. And remember, if you are new here, if you are new to volatility 75, if you are new to indexes and you don't know what to do, what you have to do now is simple. You have to go in the description down below, click the links in those description, and choose the broker deriv.com. After doing that, you fund your account. After funding your account, what do? You then go and start trading. So that's what we are going to do, and that's what I want you guys to do. I'll see you in the next video. For now, it's bye-bye. Shocks out.